What's up, world? I'm Matt Newberg from HNGRY, and this is The Feed. Each episode, we'll dive into conversations with the industry insiders who are leveraging technology to shape the way we eat. On today's episode of The Feed, I sat down with Dmitry Shevelenko, former head of Uber's mobility partnerships and founder of Tortoise, a startup that built slow-moving robotic vending machines for stadiums, parking lots, and other public spaces. In this episode, Dmitry talks about lessons learned from his startup, the current landscape of autonomous delivery bots, and the challenges for hardware startups to become commercially viable businesses. All right, Dmitry, it's awesome to have you here. Thank you so much for taking the time. I'd love for you to talk about your product and business background at companies like Facebook, LinkedIn, and Uber, and kind of how you formed Tortoise about 4 years ago.
Yeah, so I'll give the whirlwind career history. Started my career at Facebook back when it was 80 million users, and was there for 4 years as it scaled up to 800 million users. And I was a nobody at Facebook, but it's very useful to get an early exposure to hypergrowth, and you kind of you develop a taste for it, and then some pattern recognition. So that was it was a great experience. Also one where, like, being non-technical at a company that prizes technical talent, it put a healthy chip on your shoulder of like, okay, next time I'm at something that's growing, I want to be in the room where it happens. And so that was a healthy motivator of the Facebook experience as well. It was clear at Facebook that when I left, that mobile was going to be a big new category of where technology was going, and so joined Pulse News, which was one of the first mobile news aggregators that launched right when the iPad first came out, and was with them, led monetization as they were acquired by LinkedIn. Then was a product manager at LinkedIn, kind of got the technical blessing of being a product manager, so credibility in Silicon Valley, and then saw that a lot of the smartest folks from Facebook were all going to this new company called Uber, and joined Uber as a director of business development, focused on several things there. One was the Uber API ecosystem, so letting other people integrate Uber into their app or experience, like the classic examples, Google Maps, letting you order an Uber ride, and then worked on driver business development and partnerships, and then went the other way of thinking about what are other transportation products that should be inside the Uber app, and led the company's expansion into multimodal transportation. So the jump bikes and scooters, public transit integration to the Uber app, car rental, and so kind of these early efforts of turning Uber into a transportation super app, which in some ways become even more of a priority as in the last few years for Uber. And through that, got a lot of exposure to the micromobility space, and kind of these new modes of transportation, and saw an interesting opportunity to be a full-time advisor after I left Uber, and worked with 7 different startups ranging from autonomous helicopters to shared scooters to mobile parking aggregators. And that was a lot of fun, because just working with CEOs across many different aspects of mobility, and got the itch myself to start something, and that founded Tortoise, and we just wrapped the Tortoise journey at the end of last year. But yeah, I'll pause there. I can obviously go into more detail on Tortoise, but that was kind of the history of Dmitry up until the Tortoise founding.
Amazing, yeah. I definitely remember Jump very well, and I do remember the e-scooter craze around Bird, and I still see them all over the streets of LA all the time, and try not to hit anybody in my car. How would you define this broader category of micromobility to span like serve robots, what you were doing at Tortoise, which we'll get into momentarily? I guess how would you draw a circle around the space of quote unquote micromobility?
Yeah, I mean, to me, micromobility is stuff that can go on the sidewalk and the bike lane, whether it be that's where it rides or that's where it parks. So it's vehicles that are for the most part electric, and are kind of taking advantage of everything that happened in the supply chain around small electric batteries, and then you effectively not using the car lane, and kind of taking advantage of I mean, if you think about one of the most interesting urban land use developments is, while there are nowhere near as many bike lanes as there should be, there's been millions of miles of bike lanes created, and that's kind of a new use of real estate, and it creates a lot of opportunity, and we're also building more sidewalks, and so I think it's the class of vehicles that can kind of take advantage of those new spaces, and kind of they generally come with kind of this natural electrification push, which I think is important as we think about sustainable transportation. It's not just having everybody drive Teslas, but having smaller form factors where we can fit more of that into a city. It becomes also very important.
Fascinating. So I'd love for you to just give us let's talk about Tortoise. What was the original thesis that you kind of were testing, and then maybe talk about how you pivoted to this idea of a smart autonomous store.
Yeah. So the founding principles of Tortoise were low speed comes before high speed. That one was also gave us our name. So when it comes to automation, the second was light mass comes before heavy mass, and that kind of speaks to the kind of taking advantage of these micromobility lanes. And the third was remote controlled comes before autonomous. And so those are our three founding principles. And actually, our I don't think we've talked about this before, Matt, but our very first use case was actually not in delivery logistics. It was in the shared scooter space. So we developed technology so that when somebody poorly parks a scooter, we could have one of our remote teleoperators based in Mexico City repark a scooter that's in mountain view using cameras that are added to the scooter. And so we kind of officially started working on Tortoise and kind of developing it late Q3, early Q4 of 2019. And then, less than 5 months into our corporate history, COVID hit, and shared scooter usage drops to zero. It was funny. We were actually supposed to launch our first pilot market in Peachtree Corners, Georgia. And the day before I was supposed to get on the airplane was when all U.S. flights were grounded for COVID. And basically, it was when we started entering shutdown mode in March of 2020. And so that was that was a shock to the system, and obviously all the scooter operators pulled their fleets, and we decided to we could have shut down at that point, but our kind of insight was, if the transportation of people is frozen, the transportation of goods becomes even more important, and we'd always thought that delivery and logistics would be where we were trying to build a platform technology, and we always thought that would be a good second or third vertical after shared micromobility. But with kind of the need around delivering things to people last mile skyrocketing with COVID, we made a pivot towards building our own remote controlled delivery robot focused on home grocery delivery. And so we built a form factor that we thought was not available in the market, which is something larger and more modular that could handle typical e-commerce order for home grocery, which is 100 pounds of stuff. You can't really do that with kind of the Starship or Serve form factor that was already in market. And kind of the other kind of going back to that third principle of remote control before autonomous, we saw an urgency in the market, and if you don't try to solve for autonomy, you do 100% teleops, can you scale and provide value quicker? And so that was that was kind of the strategy we decided on. We were able to get some big customers on board pretty quickly: Safeway, Albertsons, ShopRite, Meijer, and they were using us for last mile delivery pilots. And now that we're on the other end of this, I can kind of be transparent. Like, we were great at getting those customers, but we didn't deliver a fantastic experience. Even when a solution is 100% teleoperated, the reality of sidewalks and variants and edge cases that pop up around connectivity led to pretty dismal completion rates relative to where they need to be to be competitive with kind of a gig economy like a DoorDash Drive solution. And so the thesis that 100% teleops means you have and again, teleops is somebody can be sitting anywhere in the world who sees out of the cameras that are on the robot and using a joystick is remotely driving it at a low speed. And so the idea that by not focusing on autonomy and just focusing on teleops, you have a viable solution. That didn't prove to be the case. And so kind of pivot number 2 for us was kind of being honest with ourselves. Like, we can keep doing these pilots and there's demand for them, but we weren't making quick enough progress on reliability. And a really interesting behavior that we saw was when our robots were parked in front of grocery stores waiting for their next delivery, they would generate tremendous engagement. Like, people would walk up to them, start talking to the robots, want to touch them, feel them. They were taller than your typical delivery robot, kind of went right up to arm height for most people. I mean, that's one of the reasons why the grocery stores loved them, as it was like, a cool technology showcase. Even if it wasn't doing much value on the delivery front, it was generating excitement. And we started surveying people, asking them, hey, like, you were talking to this robot, it wasn't really talking to you, like, what would you think was going to happen? And a surprisingly large number of people all said the same thing, which was, well, we thought we could buy something from the robot. And that was kind of the proverbial light bulb moment for us, that maybe we can do better selling stuff instead of delivering it. Again, because we have this modular form factor where you can load on different container types onto our robot platform, and the containers themselves are pretty generic, we were able to pretty quickly embed a tap-to-pay NFC reader in each of the 2 container lids. So each robot has 2 containers, each has its own lid, and so the experience we created is, we called it the world's first mobile vending robot, where the consumer could walk up to the robot, see a product that's being sold inside a specific container, see the price of that product, and without having to install an app, without having to fuss with a QR code, just tap to pay on the container lid. Payment goes through. Container lid unlocks, you lift up the lid and take out one of the items and go. And so we started, we did a full shift towards this model in early 2022. We saw really interesting traction, basically wherever you have large crowds. So we got it deployed in the Mall of America, NBA games, NHL, MLB, with Comic-Con. So we had kind of all the 4 biggest U.S. International venue operators signed on with MSAs, and so we were seeing really interesting traction. But these were all small deployments, and so the kind of tragic timing for Tortoise is right as we're kind of getting our speed going with this second pivot. We had the downturn that hit in 2022, and we weren't in a position of being able to tell a revenue story. We had kind of, again, interesting pilots and interesting MSAs, but it was not, we didn't have the ingredients to say, like, yeah, this is a real business yet. And so with kind of the fundraising drying up across the board, especially for anything that has the dreaded hardware label, we weren't able to see it through.
So what sort of products were you selling on these, when you pivoted to the smart store? How much of it was lended itself well to a food use case, if any of that, if any of those customers wanted that? And what was the business model?
Yeah, so it generally was food, and not things that were particularly temperature sensitive. So the categories that stood out was beverages, like Gatorades, water bottles, things that could stack nicely inside of a container, and then chips. The kind of all-time best performing category was cookies. So cookies, at some point we were almost thinking about going a vertically integrated route and just becoming a cookie vendor, because that was always, I think there's kind of the combination of the robot and the it's really these instant gratification categories, and the thing with our experience is we're constrained to selling 2 SKUs at a time, because you have 2 containers, and to kind of preserve this frictionless, no QR code, no app experience. You can't sell multiple SKUs in one container, and so it's kind of usually a contrast of a beverage and something you can eat, and also trying to contrast a $5 to $8 price point and a $15 to $30 price point, so that you kind of and you'll always obviously sell more of the lower cost price point. Chips was another category. Again, it had to be things that are nicely bagged, bottled, or boxed. It had to be things that hold relatively well, because while the containers are insulated, they didn't have refrigeration. And you could, we kind of figured out a good way to put ice packs in there and keep things cold, but keeping things warm would have been more of a challenge. And Our business model was a take rate model, so we would keep 10% of sales, and that was part of why we were, I think, effective in getting a lot of customers signed on quickly, because there was no upfront investment. There's no we weren't there's if you're not using it enough, we would also charge $500 a month in basically as a rental fee for the robot. But if you're putting it out every day, you're just paying us 10% of the proceeds. And long term, that might be the right business model for a solution like this. But when we kind of do our hindsight 2020, if we could do it over again, we probably would have approached this as a sponsorship business model, where so much of the value we're creating is awareness for the product that's being sold in the container, because it's being wrapped exclusively with that marketing, and for every one person that transacts and buys something, there's 50 that saw it, and we weren't capturing that value ourselves, and weren't necessarily quantifying that for the CPGs. We did deployment with Walmart. And we didn't engage the CPG. It was like a Jack Links was one of the items they were selling. And when the Jack Links folks saw it, they loved it, and they're like, "How can we get this to every Walmart?" It was clear that there was, and again, that was kind of towards the tail end of when we were running out of runway. But if we had kind of monetized it and kind of charged higher premium, say like $50,000 sponsorship, to have, your CPG product robot in the field for 3 months, we could have put bigger numbers on the board than kind of 10% of, a $5 transaction. And then we're really at the mercy of the retail partner, whoever owns the real estate, putting it in the right location, having there be enough foot traffic there to generate those sales.
Very interesting. Yeah, it's like a roving billboard, so to speak.
Really, and there's, I forget the name of the company, but there's like at large conferences, there's a company who basically just drives around a truck with a giant digital billboard, and you can pay. They just drive in circles around the conference, and if you don't want to, pay for a booth at a conference, you basically pay for that truck to drive around. And we're doing it in a more natural way, but I think there's something. It actually goes back to one of the insights from the shared scooter space. It's a pretty shitty business, as we kind of see with Bird's stock price. I think their current valuation is $50 million, and they raised I think something like $500 million in capital, and were valued at $2 billion at their peak. But the one really good thing about the shared business models for micromobility vehicles is you have a customer acquisition cost of zero, because the product literally advertises itself when it's parked on the sidewalk. You see it, you walk up, you install the app, and you get going, right? And that's different even than rideshare, where Uber was paying $20-$25 either for ad campaigns or credits to get people to get started.
So I want to zoom in a little bit more into the math problem here. And I think there's always this idea that one of the biggest costs obviously in food delivery, or just last mile logistics in general, is obviously labor. And so we can spend invest hundreds of millions of dollars or billions into these companies. They're going to try to lower that cost, right? Or we can, do something like you were doing, where you were just essentially outsourcing the labor to, do the labor arbitrage, so to speak, right? And I think when we were looking at the back of the house of kitchen automation, or even looking at companies that are doing what Tortoise was doing or what Nuro is doing, and we'll talk about some of those other companies, but on the last mile delivery side, it's always this question of CapEx versus OpEx, right? It's when is, I can invest, tens of thousands of dollars on robots that for a one-time fee, and maybe they're not there yet, right? They can't be fully autonomous, but at some point they could be fully autonomous. But I had to think about what's the payback on that versus paying someone in Mexico in a call center to remote control it, right? Or even just hiring an Instacart driver and paying them a fair wage, and what are the assumptions on the basket size and the margins, and who's going to pay for that premium and that convenience to make it work. So I guess my question for you is what is this idea of last mile being profitable through automation on the delivery side a pipe dream? And if so, what needs to be true to make that work using these kinds of tools in this space?
Yeah, I mean, I think the simple answer is the automated solution actually needs to work as well as the non-automated solution, and we're very far. I mean, it's kind of it seems like it's always on the horizon, but we're never there. And again, we thought we could get to that with a teleop centric approach. Starship's been at this for 6-7 years, and they haven't figured out how to do what they're doing outside of college campuses. And then you obviously have kind of the self-driving on kind of car lanes, which is a much even harder technical challenge, and it doesn't seem like we're making material progress there. I mean, Nuro, they've announced great customers, and it's those are hard deals to kind of negotiate, but you don't see Nuro vehicles operating pretty much anywhere, and it's because it's a really hard problem. So I think it's not that the math doesn't add up at some point in the future when the automation is actually there and reliable and working the way we all want it to. It's very much I think one of my general views is the application space for machine learning and robotics needs to be narrow. That's where this stuff, and where you have a high tolerance for failure. And the faster you're going and the larger your vehicle, the kind of the tolerance for error just approaches zero very quickly. And so I think that's kind of that's where there's appeal of sidewalk robots, is something that going at a lower speed and weighs less, even in your absolute worst case scenario, much harder to kill somebody than with a car going 25 miles an hour. But the problem hasn't been solved at scale, in either use case, and I don't think it requires, potentially requires fundamental breakthroughs that you can't put a timeline around. So it's not just a question of like, oh, if we get another 1 million miles of training data, we're there. I mean, it's kind of there. I think that I'm butchering this phrase, but there's something to the effect of like, the last 1% is 99% of the work, and I think we're kind of we've been in that. It's very easy to show demos that get look like they're 95% reliable, but to actually scale any of these technologies, you need 3 nines reliability, and we're not close to that.
Yeah, when you talk about being like highly error tolerant, I think about this quote that's on Serve Robotics investor page where they're talking about why deliver 2-pound burritos in 2-ton cars, right? And it's like, we can deliver these things and these little tiny things, and you can kick them over and it's not going to do too much harm. I think I don't know how many people listening to this are familiar with the landscape of these players. That some of them we've mentioned, some of them not yet, like Kiwi, like Serve, like Neuro. I just give us like a high level of these companies that are in this space trying to automate the last mile, and then maybe talk about what we all saw them pop up kind of in the last couple of years. What was the kind of fundamental enabling technologies you think created this trend?
Yeah, so I'll start with the last part. I mean, this was part of our thesis at Tortoise was, say around, 2017, 2018, 2019, you had an inflection point where, electric batteries that can power a, 100-pound or under vehicle, going at these kind of, sub 8 mile per hour speeds, they got pretty cheap, and very reliable. So say that kind of became commoditized. And then, the base components in an Android smartphone, with 4G connectivity, and really impressive processing power, that became commoditized at a kind of a sub $100 price point. And then kind of the third trifecta is you have, around that time, maybe a year or two before it, you pretty much have 4G connectivity everywhere in the world, where you have a need for labor cost reduction, and so I think that those kind of the batteries being cheap and ubiquitous, the electronic components to power the connectivity, and then having kind of the 4G umbrella everywhere. I think that's it was essential for many different industries, including shared scooters, but I think particularly in delivery robots, that was important. I think I'll start with Neuro because they're the least like the others, because Neuro is more similar to a Cruise or a Waymo. They're operating on the road, and they need to they're effectively building a car, except their car will never have passengers in it. And so the Neuro theory of the case is, if you're building a car that never has to carry people but still goes on roads where there are cars with people, you're going to get to market faster than a Cruise or Waymo, because you can do things like, if your vehicle's in a crash, you can have it fold in on itself and hurt the cargo, but then not hurt the other car. And so I think that's why Neuro's invested heavily in building their own vehicles, custom designed for transporting cargo with never having a human inside. And so I think that's kind of the Neuro play. And to their credit, Neuro has been effective at fundraising, more so than any other kind of delivery robotics player, right? I mean, they've raised hundreds of millions, and I'm sure there's a model where they can have runway for the next 8 to 10 years with no problem. And in some ways, that's kind of an interesting thing about. There's a barbell strategy here. You either go very big and kind of develop on a 10-year time horizon and have to raise capital to let yourself do so, or you try to bring to market a solution that is immediately kind of accessible, That's what we were trying to do at Tortoise, and we weren't successful in that. We were kind of in the middle of the barbell, which is the no man's land, where it wasn't this huge vision like a Neuro or Cruise or Waymo has, by focusing on teleops, but it also wasn't something like a SaaS, kind of enterprise software play where you can, scale up immediately within, 18 months of launch. And so I think that's kind of the no man's land that you want to avoid. So you got Neuro on one end of it, I think it's tough to build a car, and it's tough to build an autonomous car, and they've got all the same challenges that Cruise and Waymo has, and it's unclear that the constraints of their use case actually let you scale faster than in robotaxi land, right? And I think that's the big open question on their strategy. And then you've got Starship, which is really the first to the space that they were developed in Europe. It was the former Skype founders, and they've certainly done the most miles and deliveries, and they've really focused on college campuses. But something about their story also doesn't add up in that, if they're doing so well, they haven't been able to raise from kind of, premier investors, and it's like kind of some random European development bank was their last source of cash, and they've really focused on the college campus environment and haven't been able to kind of grow out from that. Part of what I understand about their business model, which is smart, is they actually charge the college campus a flat fee. So it's like, hey, if you want Starship robots on your campus, you pay us, $500,000 a year. And so that way they're a lot less sensitive to the revenue per delivery than a player that's trying to kind of, have an equivalent to DoorDash Drive pricing. And so I think that's, I presume that's why they've stuck to college campuses is, and from the point of view of a college campus, it's almost like a marketing benefit, right? You're trying to attract students. You want to say, hey, we have this futuristic campus, look at our robots. And it's like, okay, we'll kind of, compared to all the other marketing initiatives we have, $500,000 to, help with this kind of food delivery story isn't that expensive. So I think that's a nice niche. And I think KiwiBot has really focused on a very similar story. They're as far as I understand, at scale only on college campuses. They kind of came to market a few years after Starship, but kind of similar form factor. And then you've got the Serve folks, which were first developed inside of Postmates, and then after Postmates acquired Uber, spun out, and they focus, really on the autonomy piece and kind of building the most sophisticated technology. And I think that's that's kind of been their differentiator and kind of really trying to get at autonomy and not just do deliveries but rely heavily on teleoperators. They've been really successful kind of getting folks like 7-Eleven, Uber to be investors, and so they have kind of a nice interplay of their kind of capital stack is also their customer stack. And so I think that's kind of serve well. But it's a bear market for anybody in the hardware robotics space. I'm sure we're going to talk about the crowdfunding campaign, but it's you don't do something like that when you're if there's other simpler options kind of easily at your availability.
Absolutely. You mentioned a lot of these partnerships, right? Like 7-Eleven and Serve, and Neuro had something with Domino's, and you see these headlines time and time again. We just saw one this week for a company called Conjure, formerly known as RoboMart, which is not automated, but similar idea kind of to Tortoise, but using the city streets and bringing stores to people with Mars or Unilever. And you read about these partnerships and then you just don't hear anything else. They just kind of like dissipate into the media sphere, and then no one talks about them again. So like what's And you've gone through this with like the likes of Safeway, right? Albertsons and some of the bigger grocers that you were mentioning earlier. Like, help us think about how these companies are looking at these startups, how seriously they're taking it. Is it an M&A path? Is it just something for press? How serious are these companies about these partnerships, and what are they looking to get out of them in the early stages?
Yeah, I mean, the bigger the company, the harder it is for them to do anything, right? So they've got their own bureaucratic stagnation. And so I think kind of the most general kind of insight into them is they're just looking for learnings and some good press, like, but they realize like a lot of this stuff they can't do in-house, and it's not very expensive to them to run a small pilot. It makes them look good, and it's kind of something that their CEO can mention during a quarterly earnings call as like, hey, like we're not being left behind by kind of the tech space, and we're even though we're an incumbent, like we're innovating ourselves. But it's there's few examples of kind of large grocers, large restaurants like truly scaling up robotics. I mean, I think the most successful category has been kind of micro fulfillment centers. But even that, like look at Takeoff Technologies, which is a micro fulfillment provider in Albertsons. Like I think they announced like they've just done their 15th location. That's been like 5 years, and I mean, and that's like the best case, right? Yeah. So it's like you're 5 years in as your marquee customer, and you've kind of have 15 locations. Now that's each location is very involved. It's just its own little factory, but that's not. I mean, this stuff doesn't happen fast, right? And so, from the point of view of the startup, it's I mean, every founder who's listening knows this, like you kind of have to fake it till you make it, right? And so generating good headlines that are vague as to the specifics of what the big guy is actually doing, there's still utility in that, right? There's utility in that it helps you land second tier customer. Like, so, you announce something with Safeway, and then you have the tier 2 grocers are like, oh, Safeway is doing this. Like, we should also have a robotic strategy, right? So there is, I mean, I'm a big believer that like earned media is, for early stage startups can be your most effective marketing channel, right? Definitely more effective than like sponsoring a conference, or other things that I see startups kind of, spend resources on. So I think there is I guess what I'm trying to say is there's an interesting combination where a pilot partnership can deliver no substantive kind of experience to either the large company or to the startup, but still be useful to both. And it's, I mean, really the person that is being suckered is the reader of that content that thinks that like all this stuff is happening when a lot of it is vaporware. But it's I mean, it's not a stupid strategy for either side. But yeah, I would certainly be skeptical of when you see these announcements, and like I think always like if there's no specific details mentioned, assume that it is the minimal version of whatever could still plausibly be true from the headline. Is the reality, because if there are substantive details, those will make it out in the release.
Amazing. Yeah, I think I know this pretty well. We got caught up in the crosshairs of the 7-Eleven serve thing. They wanted to launch this crowdfunding campaign right around the time and had it look like, I don't even want to talk about this, but like basically I ended up covering this 7-Eleven launch, and it ended up taking 40 minutes to get like 3 things delivered, and I paid double the amount, the basket size of what it would cost inside the store, right? When you count for the delivery fee. And they're saying like the value to the customers that they save money on tip. And it was absolutely ridiculous because I ordered it from like a 6-minute walk from the store, and it took 40 minutes for this stupid robot to show up at the store for the guy to pick the order, and it just felt like a dystopian hell. And then I talked to the guy at the 7-Eleven, and he's like, well, we only get one of these orders from the 7-Eleven, from the serve robot a week or something. And some weeks we don't get any, And I was just like, yeah, this is total BS. And then they go and they do this crowdfunding campaign where you're looking at the financials, and there's like, an ongoing concern for the business, and you're reading it, and they're trying to sell to retail investors for a minimum of $1,000 investment at a $300 million cap. If you invest today, and it's going up to $350 million cap in the next couple of weeks, so you better invest now. And it's just, I don't know, rubbed me the wrong way. And you look at this company's it said it never generated a penny in revenue, and that they want to sell ads. They haven't done it yet, and they are burning $1.4 million a month with $4.8 million left in the bank. And, that's down from $1.8 million at the height of their burn. And I'm just looking at this and thinking, where does this pencil out? So I guess my question is, where are these companies in terms, in terms of like their runway? And, what do you make of this crowdfunding campaign? Like, are all these companies essentially just going to fold in the next year or two, or are any of them going to make it?
I mean, I think it's, in terms of the fold dynamic, I think it's broader than just delivery robots, right? I think we're just now in a capital constrained environment with higher interest rates, and anything that isn't like immediately on a path to profitability or has a hype cycle around it, like large language models and generative AI, you have to assume it's you're going to see a lot of categories kind of have a lot of companies go under. So I don't think it's necessarily specific to delivery robots. I think robots have. I mean, it's interesting that this isn't the first robot crowdfunding campaign. So like Nightscope, which does the security robots, I mean, they've raised, I think $100 million through crowdfunding. And then Miso, that does the Flippy robot, they've raised tens of millions through crowdfunding. And I think there is something, people like, I mean, it was kind of one of our insights with the mobile vending robot, people like robots, right? And it's not necessarily, when you're doing crowdfunding, it's not like necessarily a rational investment. People are kind of, investing in their passions. And I think there's you want to have fans that are owners. And I think there's kind of a strategy around that. And yeah, I mean, I think, again, like I said earlier, like you don't do this stuff. I mean, there's two reasons to do crowdfunding. One is you don't have an alternative. The other is you have an alternative, but you can raise a similar amount at a higher valuation with kind of the retail investor crowd than with kind of financial investors. And that, that there's certainly kind of, that's part of the factor here. But yeah, it's I mean, crowdfunding, it's good that I'm grateful that we changed the regulatory landscape so that people can participate. But in general, it's, there's an adverse selection effect right now with crowdfunding. This isn't even specific to robots. Like the stuff that comes to crowdfunding is usually the stuff that isn't able to get other funding. And so kind of, it's not that retail investors are being let into like the Sequoia deals. They're being given access to, the deals that Sequoia is passing on.
Two words come to mind, and I'm just going to leave it at this: moral hazard. That's it. That's all I have to say about that. But I'd love for you to also talk about another topic with another trend that could potentially make food delivery profitable in the future, which are drones, right? And then you even have things like this underground network called PIPEDREAM Labs. So I guess, do you have any thoughts on these pilots with companies like DoorDash and Wing, or Walmart and DroneUp? What do you think about those? Are those attainable in the future?
I mean, it's those are tough because you've got the noise factor. I think that's going to be, that feels like even if you're fine on safety, you've got noise and kind of, communities kind of complaining, which is one of the reasons, kind of helicopters, that there was like a heyday for helicopters being a form of urban transportation, and there's kind of safety issues, but also meaningful noise issues that kind of curb that. And I think that's an issue for drones kind of, outside of rural areas. So I think in rural areas, if you look at kind of where, Zipline came from, kind of doing medical deliveries in rural Africa, that makes a lot of sense. And, the more space you have to work with in the context of a drone delivery, like the less safety sensitivity there is in kind of accident scenarios. I think if we're talking about, for a DoorDash or an Uber Eats, where the bulk of their business is, suburban, urban areas, I'm actually more optimistic about the PIPEDREAM model than I am about kind of overhead drone delivery. And it just, I also feel drone delivery is going to have the city councils will just kind of regulate that one to death, because it's very easy for kind of the noise complaint issue to kind of activate all the NIMBY forces that come out, and at least with shared scooters and kind of electric bikes, you have kind of the sustainable transportation story that kind of taking cars off the road, and it's more directly accessible as a justifying narrative. I think with drones that becomes tougher.
Just real quick, can we just talk about the PIPEDREAM model? It's like PVC pipes where you could just shoot a burrito and it's going to run next to the sewer line or something like that. Like what are the hurdles to getting that to work?
I mean, the biggest hurdle is like letting people, agreeing to have people lay the pipe, right, for your use. I mean, it's very analogous to kind of what Elon is doing with the Boring Company. And my thought on why did Elon do the Boring Company is it's actually a hedge on Tesla's never becoming fully autonomous. Because, if you have your own tunnel, it's kind of like a train, right? Like you actually can have the autonomous operation inside that tunnel. And so I think that's where, I think if PIPEDREAM can get the pipes, the technical feasibility of like the robot that goes through the pipes, that's kind of, I mean, I don't want to say trivial, but that's just, there's enough engineering that gets that solved in a fast enough timeline. Now, can you get folks to lay the pipe? I think there's interesting kind of a twist on where PIPEDREAM could go, and they've talked about this, is imagine in a curbside pickup scenario, just having a pipe go from the store, a restaurant like, a Starbucks, out into the parking lot. And so nobody has to bring you, that kind of store staff doesn't have to bring you, the order to your car. It's just kind of waiting for you in that parking lot, right? And there you just had to lay pipe, from the inside of the store out into the parking garage, so like, 20, 30 feet of pipe. So I think for PIPEDREAM, it's going to be interesting if in completely new cities, new neighborhoods, can they kind of have their pipe kind of go in by default. I think the big challenge is in existing environments, like, is anybody going to let them tear up the streets to like put down a pipe so people can get stuff delivered? And, what does that timeline look like? But if they can pull that off, they're avoiding kind of a lot of the other challenges that the sidewalk robots and drones will have.
Fascinating. And you're definitely keeping an eye on those guys. Some interesting stuff happening with them. As we kind of as we kind of near the end of the conversation, I'd love for you to talk just where you see the general food delivery landscape heading, as labor costs continue to go up, as food costs continue to go up, as an example, something I just saw on Twitter this week was the founder of Intercom sharing a receipt, and this happens all the time. I see these receipts on Twitter all the time. It's like $37 worth of food for $74 because you have just boatloads of fees plus obviously the tip, but it just does not look good as far as the way things are trending. So where do you see vertical integration, robotics, AI, and all these different levers that we potentially have playing a role in making this work for groceries and or food delivery?
Yeah, I mean, it's and I hope I'm proven wrong about this, but this isn't a Rubik's Cube with like a lot of different solutions. At the end of the day, it's an efficiency challenge, right? And in any world where you have a driver with like one or two orders delivering those, that's going to be expensive, right? So the kind of trade-off is going to be, do you really need to put in your DoorDash order 30 minutes before you want the food, or would you rather like put it in the morning or the day before? You can still pick whatever food you want, but you pick a delivery window the next day, and that way there can be that DoorDash driver can have 10 meals loaded in, and their kind of drop rate per hour goes up, right? So batching together orders, like it sounds simple, and it sounds like almost stupidly simple, but like that's going to be how we get costs down. And I think where there's room for innovation is how do you make people feel like placing your order in the morning or the day before is as magical as 30 minutes from now. Because do you really is our tastes and preferences so fickle that you only want to know what's going to be for dinner 30 minutes before you're eating it, right? And how much are you willing to pay for that premium? I mean, you had on a previous podcast Boris from Jingle, and this was I really like parts of how he talks about this. I mean, to me, it's kind of one way of framing it is, can you inverse fulfillment and kind of the delivery, meaning that somebody gets notified, so fulfillment and demand. So somebody gets notified that something is near them, product is near them, and then they demand it, versus first demanding something and then having it be fulfilled to you, right? And so that's another way again of kind of creating batching efficiency. But it's kind of one of these pick two of the three. Either things come to you fast, either you have a lot of variety, or you're kind of not paying through the roof, and you can't have all three.
Absolutely. We can have everything. We can have anything, but we cannot have everything, especially in this economy. So totally agree with you there. And I think that the roving truck model is super interesting, pushing things towards the edge. You see this with Schwann's. It's a frozen food company that's notifying customers when they're nearby. It's essentially the ice cream truck model, just you take out the music and you put push notifications in. Maybe one day Amazon's already pushing products to warehouses, I think proactively using their AI to, essentially predict that you're going to buy this razor blade and have it delivered to you same day, right? In those same day markets. Everything is just going to get pushed closer and closer to the customer, and then try to predict and then create that demand.
Yeah. And I think as much as we want variety, having to make a choice when have 100 options, it's a burden on the consumer too. I mean, there's a reason Costco is so successful, and it's not just the kind of value. It's that you don't have to go through this mental gymnastics of picking between 20 options. They've got 2 or 3 at most. and I think kind of it becomes, it's interesting. I'm sure you're familiar with this, but not all the audience. The first incarnation of Uber Eats was called Uber Fresh, and the model was you had 3 products that were preloaded in the hot products already in the car, and the car would come to you, and it wouldn't have to go to a restaurant, right? Because you only had one of 3 options. Actually, interesting enough, one of the reasons that didn't work as well is people wanted more variety than 3. So three isn't enough, but it would actually come too fast. So people were like, it would come in 5 minutes, like kind of like a ride hail would, and people like wouldn't be ready for it, or like wouldn't be ready to go down. So I think there's room on the, people, as long as it seems like the sweet spot for food delivery is like between 30 and 45 minutes, but kind of getting stuff to you in 20 minutes versus 30 minutes, it doesn't seem like that's, meaningfully delivering a better consumer experience. I think the fear is like the 45 minutes kind of creeping to 50, 55, and you just see kind of that estimated arrival time kind of increasing by the minute, every minute. And that's kind of that I think that's where the industry is kind of is not able to give people reassurance that there's no great solutions to it, right? I mean, you're dealing with human factors all the way around, and things break and cities don't work perfectly.
Yeah, you don't want it too fast, but you don't want it too slow. The consumer psychology behind this is fascinating, and I'm looking forward to seeing a lot more startups try to tackle this. Dmitry, this has been an awesome conversation. Everything we've covered, it's been a pleasure having you on board, and really grateful for your perspective. If people want to follow you, what you're up to, where can we find your tweets, or how can we follow you?
At Dmitry140, and always happy to chat with folks that email me at dshevel@gmail.com, dshevel@gmail.
Awesome. All right. Well, thank you so much, and best of luck in whatever you do next. Thanks for tuning in. If you like what you hear, please hit subscribe wherever you're listening to this podcast. And if you're curious to get a first-hand look at the cutting edge of food and tech, check out HNGRY.tv. That's Hungry with no U, where you can join in on live conversations like these, or sign up for the free weekly newsletter.